Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shruti Sharma and with me, Shell D'Souza. And viewers, this is a show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts. And not just that, today is Wednesday and we're going to be getting you Women's Wednesday special for all of you all. But before that, let's have a quick look what the markets are up to. So indeed, great day coming in for the markets yet again because it's Nifty 50 that is holding on to the gains of almost 66 points. But it's Nifty Bank that is leading it from the front. More than 400 points of gain is what we are seeing on the banking index, and not just the large cap names. If we talk about some of the smaller government-owned banks as well, those stocks are doing pretty well in trade today. Stocks like Central Bank, IOB, Indian Bank, they are having gains of almost 6 to 7% in trade right now. If we look at IndiaWix, that is now in the red territory, and also the advanced decline ratio is totally in the favor of the advances. So the bulls are taking in charge of the markets. Let's see whether or not we are able to hold those levels or not. But from the banking index, it's HDFC Bank that is leading it from the front. Almost 2% gain is coming in on that particular stock. Other than that, some of the life insurance counters, be it HDFC Life as well as SBI Life, they are seeing some bit of a rebound after the recent correction. From the IT pack, TCS is also up. But on the flip side, a couple of these pharma names from the likes of Cipla, Aurobindo, Sun Pharma, they are seeing a bit of a drag right now. Bharti Airtel is down about 2%. But all in all, a decent day coming in for the benchmark indices as well as a lot of stock-specific action is what we have been tracking. But with this, viewers, let's move on and let's start taking all your stock-related queries then onto the show. But before we go to our experts, a small note that you can connect with us live on the WhatsApp number that will be flashing on the top of the screen throughout the show. And you can also mention us the stock that you've invested in, the stock you wish to invest in. Tell us your name, the quantity that you're holding, and your time horizon as well. So let's get started then, and let me welcome two of our very special guests on the show today. We are being joined by Hemen Kapadia on the technical side, and we'll be also joined by Lancelot in a short while from now. But first of all, a very good morning, Hemen, and thank you so much for your time. A lot of queries have already started pouring in, Hemen. So let's get started with the first one that I have. And this one is coming in on Deepak Nitrite. Hemen, this one is from Venu from Chennai. And he's holding Deepak Nitrite, and he's been holding it for the last 2 months. What is your take on this particular counter? He has 1,000 shares. Buy price is 305 rupees is what he is saying. I guess there's actually some mistake with respect to the buy price. I think that close to 3,000 rupees is where he must have entered, considering the stock price and the time horizon he has mentioned. So, Hemen, your technical check on Deepak Nitrite.
A very good morning to you, Shruti. Thank you for having me on the show. It's always a pleasure. Absolutely, I think 3,000 would be more like it, like you mentioned. So we've been in a corrective phase for some time, and sometime, I mean, there's a 6th month. Longer term charts are positive. So 2 months holding. Now, if the holding period is a year or more, I don't think there's anything to worry about. Stock would be back at 3,000 and maybe even above that. Shorter term levels, 2780 is important. We close about 2780, we see a further upside. So, and Deepak Nitrite is frankly speaking not a very trading stock. It's more of an investment stock. So a longer term hold is absolutely not a worry.
This next query that I have is coming in from Shrikant, who's writing from Hyderabad. He is holding Paytm about 100 shares since listing, but at an average price of 1,376. He wants to know whether he can hold on to this for the longer term, or should he go ahead and average it out right now? What sort of strategy should he use? A very good morning to you, Lancelot. Good morning to you as well, Hemen. And Paytm, I'm not sure if it listed around 1,500 or no. So given the fact that we did see a sharp drop when it actually listed on the bourses, I'm unclear about that. But since the fact that he's been holding on for so long, actually, Lancelot, and now looks like it is going to achieve his buy price, what sort of a strategy should he use now for Paytm? Should he average it out and hold on to the entire quantity?
So I think, Paytm is in a little bit of a difficult space at the moment because a lot of it's, there is a discussion that they may get, may get merged or acquired. There is a move on. And since we're not sure how the whole, scenario will pan out for the company, maybe the business will turn around and things will move, but there's a lot of risk involved in terms of acquiring this company at these higher levels. So if one is willing to take that risk, then yes, Paytm does offer, potential. But if there is, if the person is risk averse and you do not have the risk appetite, because this stock could see severe movements on the downside in case there are negative developments, and could see very good movement on the upside in case of positive developments. So from a risk reward ratio at this point of time, there is fairly high risk in this stock. So one should be a little careful in terms of accumulating at lower levels. But if you have a risk appetite, yes, definitely one can look at it.
Risk appetite, then you can look at averaging it out. Given the fact that look at the charts of Paytm, 41% down since listing. It did list with a sharp discount, about 1800 odd rupees, and from there on only drifted lower, and it was marred by negative news. That's why the stock actually saw a downtick of that sort of proportion. But Hemen, quickly on the charts, because the last 6 months, or for the matter of fact 4-5 months actually, has been really good for Paytm, because what a recovery we've seen in this counter. Based only on technicals, what's your view? Do you think too much risk is there in the stock to actually average it out or add into your portfolio right now?
Very good morning to you, Cheryl. Thank you for having me. Yes, I think you sort of answered the question yourself, Cheryl. There is it's a decent amount of risk. Like you mentioned, 8 months. There's an 8th month where Paytm is a month-on-month positive. We've ended positive. So, and we are running into a virtual roadblock at 1000 level. It's psychological, but it's technical resistance also. So, averaging here, I am not sure whether the risk reward makes sense. Having said that, we are in a uptrend on all time frames. We have relatively limited data, daily, weekly, monthly. Any time frame you look at, Cheryl, we are in an established uptrend. So nothing to worry on that count. So yes, I think it would be a bit risky to buy more, but the trend is up.
That's the take coming in on Paytm, and moving on then. And Hemen, once again coming to you to have your take on the leader HDFC Bank, wherein Kunal, all right, Vivek is the viewer's name, and he wants a view on HDFC Bank holding from a price of 1300 rupees. Any targets to keep in this particular stock? He can continue holding this for the next 1 year.
Srishti, I suggest if we can extend this time frame to 2 years, because the stock has been actually hatching eggs, doing nothing for 4 years now. 4 years, 1275 and 1794, and now we're above that. So after 4 years of a consolidation, a quality stock like this, 2200 coming, maybe 2400 coming. It's going to take time. It's a slow mover. It's an FNO stock. But after 4 years of a breakout, I have a feeling the stock is going to surprise and continue to surprise. So strong hold, nothing to worry.
All right, strong hold, nothing to worry, no doubt. But Hemen, like you say that 2 साल और बोल के बहुत सारे साल हो गए और कई साल हो गए, and you've not seen HDFC Bank perform. So I'm sure that hopefully this time around in the next 2 years we will be able to see it actually give better returns. It's hit a fresh record high levels, but if you see the movement of HDFC Bank hasn't been that great. So this 2 years should really be fruitful, you say?
Absolutely, and I totally agree with you, Cheryl. This 2 year thing has been going on for a long time, and yes, even I just said 2 years now. But yes, I think, see, realistically speaking, 2400 seems to be on the horizon. And you're right, percentage return, that's not much if you bought recently. So quality, yes. Or if I may play the devil's advocate, if you want to do something out of the ordinary, buy PNB, you'll make 50% return in the same time frame. So the return will be more than probably HDFC Bank, Cheryl.
All right. Let's take this next query coming in from Professor Thomas George then. He's writing to us from Kochi. He wants to know about Tata Elxsi. He's bought 200 shares at a price of 7,050 rupees per share. His question is, Lancelot, what to do now? So what should he do now with Tata Elxsi? The price that he's bought is about 7,050 rupees per share.
So Tata Elxsi actually is a great business. They are in the project engineering or project software business where they take on assignments in the new areas, whether it is autonomous car for JLR or driving, or it is new kind of medical, software for medical companies. So they are specialists in this field, and there is a demand for specialization, especially given the induction of artificial intelligence into so many business areas. Tata Elxsi will be getting a lot more, orders going forward. But the demand can be lumpy in terms of certain quarters. They may not get that many orders. Or there may be a bit of a slowdown given that in the US, you might see some new policy changes coming in once the new president takes over. So from a risk reward ratio, this looks a little bit expensive. It's trading at a little higher multiple than its average multiple over the last, say, 5 year trailing. But one can accumulate this in small lots. Over a longer term, this stock should give you good returns.
So that's the take coming in on Tata Elxsi. But viewers, before we take a short break, we at Times Network are back with our flagship event, India Economic Conclave, presented by IDFC First Bank, which has been the epicenter of igniting the right conversations pertaining to India's growth. As India aspires to surpass Japan and Germany to secure the third position, India needs to sustain its economic resilience amid global challenges and eminent policies amid at faster economic growth. The 10th edition of India Economic Conclave, through its aspirational theme, Fast Track to the Top 3, will chart a roadmap on how India can accelerate its ascent to becoming the third largest economy in the world. IEC will feature the biggest voices from political, global and markets, economy and corporate world. So tune into Times Network to witness all the action live on the 12th and 13th of December.
Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get your answers for all of your stock-related queries. Remember, you can write to us, viewers, you can write to us on the number flashing on your screen to talk about your stocks and give you the best advice. We have our experts today, Hemen and Kapadia, on the technicals, while on the fundamentals, we have Lancelot Dcunha. Once again, good morning to both of you gentlemen. Let's continue taking the query. And the next query that I have is coming in from RG Rao, who's writing to us from Trichy. He's a senior citizen. He wants to invest a lump sum amount about 1 to 2 lakh in Midcap IT company or auto ancillary or the pharma space for a period of about 18 to 24 months. What's your take, Lancelot? How does this entire mid-cap arena look for these sectors? No doubt auto space has been hit as well. Globally, things are not looking good for the auto space, so that could also have an impact on the auto ancillary shares back home, which actually deal with these global companies. How should one look at these sectors? And out of mid-cap IT, auto anc as well as pharma, which one do you think is the best bet for the next 2 years?
Yeah, so I think, when you look at these sectors, auto, definitely we are seeing a bit of a slowdown, both from the numbers as well as if you see the auto is a play on GDP growth. And if GDP growth has slowing down, then obviously automobiles will also slow down. And again, in the auto space, you have the two-wheeler space and the four-wheeler space. We've seen a slowdown in the passenger vehicles. We've seen some slowdown in the two-wheelers over the last 12 months. And, the outlook also doesn't look that encouraging as of now. So if one is looking at a short term, like a 24-month, because in long-term investing, 18 to 24 months is relatively shorter term. So auto could be one space to avoid. While stocks have corrected, they haven't corrected that much in order to make valuations attractive. So I think for this point in time, one can look at, avoiding. As far as pharma space is concerned, that space has been improving. We have seen, significant growth coming up on the pharma space. But when you look at pharma, I think one could break pharma into two parts. One is the pharmaceutical companies, and the second could be the healthcare or the hospital segment, as well as diagnostics. So I think that space seems to be more attractive in terms of, the healthcare. In the healthcare, if you look at mid-cap companies, you could look at, Narayana Hrudayalaya. That seems to be a good option to accumulate. Then Dr. Lal Path Labs in the in the diagnostic space seems to be showing good results going forward, as well as growth is, slowly coming back. So I think these are companies where valuations are reasonable and there is strong growth, as well as there is reasonably good, earnings growth potential over the next 24 months. As far as IT is concerned, I think the IT companies haven't really corrected. In fact, many of them have actually risen over the last 12 months, and we have yet to wait. I think it's better to wait and see, post January, what is the prognosis in terms of the policy decisions coming in from the US, and whether they are positive or negative for these companies, because the mid cap space always gets affected more than the large cap space. So valuations of mid cap companies as of now in the IT space seem to be a little bit, expensive, and one should not take the risk of, buying at this point in time, and then post policy announcements you could see a drop. So I would, maybe stay away from IT till January, till we start getting some clear-cut announcements from the Trump administration.
All right, then. Those are the top bets coming in from Lancelot. We're moving on then. And Hemen, if you can advise one of our viewers named Sunita Rai from Bangalore on levels to enter Reliance Industries as well as PNB at this price point.
Okay, we'll start with Reliance Industries history. Come off from 1610 to 1220. Obviously, these are ex-bonus levels. So, one, do not invest 100% at one go. Things are still a bit wobbly. This is a bounce, a recovery, not a rally. So there could be some more declines a couple of months down the line. So first, 1320 is one level, 1220 is a second level, and the third level would be around 1160. Spread over the next 3 months. So one third in terms of Reliance. In terms of PNB, the picture is a lot more different. PNB is in a long-term uptrend. We've just finished a 7-8 month correction. We are heading towards 140, and 14 to 18 months down the line, we are heading towards 170. So one can buy 50% over here and wait to invest the other 50%. So I have, at least on the current chart structure, PNB looks, I have more conviction in PNB.
All right, let me take this next query then. It's on a stock that has been in news over the last few trading sessions. Megan wants to know what should be done for MapmyIndia, that I see Infosystems. Now that is down quite a bit in the last 2 trading sessions. We have Gauri also who's asking that is it good fresh investment at this point in time. Let me take actually both of your views, because no doubt our viewers are asking for short term based on technicals, but since the stock is moved based on news flow, let me ask you first, Lancelot, how does the prospect for MapmyIndia or CE Infosystem look from here on, given the fact that you had that announcement coming in from the MD and the CEO of the company, then you had the clarification come in from the management as well. So how do you see all of those events, and how does the prospect for CE Infosystem look like now?
This is it's a very confusing point in time, because when you have your MD and CEO deciding to step down and start a business of his own, and which is in the same space as the existing business, I think there is a lot of confusion. There's a lot of uncertainty about what the future of the company is going to be on a fundamental basis, because the MD CEO are the people who are driving the business going forward. So unless they get a new MD and a CEO, come up with new opportunities and a new plan going forward, I think this uncertainty can even drag it much lower, and the risk can be very high, because if the business collapses because it is not able to sustain going forward, I think there could be a big risk in the smaller companies, or even in these companies. A lot depends on the MD and the person driving the business, as opposed to maybe the larger companies, where if an MD resigns, someone else takes over, succession becomes a lot easier. So I would recommend that it would be better to stay away unless you have a very large risk appetite. You can take a call based on the fact that valuations have fallen. The further, you might see a lot more volatility going forward.
All right, so that's the take coming in on CE Infosystem based on fundamentals on the charts, Hemen. Given the fact that you have these news flows which have been negatively impacting the stock, do you think as an investor, now is the time that one should even look at the stock or wait for the dust to actually settle?
I go with your second half of the question, Cheryl. I think one should wait for the dust to settle. Obviously, for reasons 2750, we posted a low of 1513, 1513, intermediate downtrend. I don't have too much of data to take a very longer term view. Currently oversold, downside limited, high volume yesterday. But frankly speaking, there isn't anything very convincing which would warrant a buy at this point in time, Cheryl. So I'd say wait for the dust to settle. And if you are, like Lancelot mentioned, if you're a high risk investor, today's low is your stop loss, but I'd say avoid.
Avoid coming in on MapmyIndia. Just wait for the dust to settle at this price point. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back.
We have Hemen as well as Lancelot with us, and let's continue taking your queries then. And the next query that I have is coming in from Rajiv from Mumbai. He wants to know about BEL, 400 shares which he purchased at 275, as well as 1,000 shares of L&T Finance at 140. He wants to know what's the medium-term target and how's technical charts looking for these counters. What's your take, Hemen, for BEL as well as L&T Finance?
Okay, BEL, the outlook is a positive, shell. Rounding bottom above 55-day EMA looks good. Thing is, we are into an intermediate correction which might be ending. Longer term uptrend remains in place for the last 4 years and counting. So, yes, headaches can come in at 324 and 340 in terms of resistances. So, 340 can be a potential target. And as far as L&T Finance is concerned, downside appears limited. We need a close up of 149. So a first modest target would be 156. And if you are an investor with a 2-year time frame, your target should be 220.
All right, so that's the take coming in on BEL. The stock is indeed in the news flow as well today. But moving on to the next query then, and Lancelot, if you can help Balan with 2 of his stock queries. His query is that should he go ahead and sell Gujarat Ambuja Exports as well as Bajaj Health at this price point because he's not making money here, but rather go ahead and buy Honasa Consumers as well as HDFC Life. These 2 are the counters that has been in the news flow. Recently, both of these stocks, be it Honasa Consumers as well as HDFC Life, they both have corrected as well. So, Lancelot, would you suggest that move out of both of these stocks names and maybe go ahead and get some exposure here?
I think Gujarat Ambuja Cements, has had a lot of negative news flow in the last couple of weeks. And that is one of the reasons why it is down. Although, from a fundamental perspective, the company is still growing and cement is an area which will continue to grow. So if it's looking at, momentum, then yes, momentum could be negative, and that is one of the reasons to get out, but not on the basis of valuation. As far as Honasa Consumer is concerned, while the stock has corrected considerably, you see the company is undergoing a change in its business model, and it's operating in a space where B2C is becoming increasingly important. But this business, which is going to grow, is going to take a while before they can actually, fine tune the business model in order to justify the high valuations that the company is currently trading at. So given that valuations are high, I think there's still a lot of risk in this counter, because maybe 1 or 2 quarters, if the results are not showing up in terms of improvement, you could see further downside or re-rating of the stock back to much lower valuations. So the risk is very high at this point in time. Unless one has a capacity to absorb that kind of volatility or risk in the portfolio, one should stay away from Honasa Consumer.
That's the take and the advice coming in from Balan. But with this, Hemen as well as Lancelot would like to thank you for taking the time out and joining us and helping all our viewers resolve their stock-related queries. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back just after this quick break.
If you like this video, then like, share and subscribe to ET Now.